Barry McGuire, welcome back.
Thank you, Patrick. Always fun and great to be back.
Our live show, we had a little bit of technical difficulties on the last one, but we're here now, and we're talking some, what do we call them? Creative strategies, advanced strategies.
Yeah, call them both of those things.
Call them both.
Something past the old buy and hold. What else is there in real estate besides buy and hold?
Sometimes it seems that way.
Yeah.
Well, listen, if you're listening in on this, hopefully you are, then, we start to understand that given the economic conditions today, what's going on with the banks and some of the challenges around financing, interest rates, then we start to look at kind of slow supply or lack of supply. And we need to get a little bit creative with our investing strategies because real estate still makes sense. And we just have to adjust our strategies to the investing climate, we'll call it that, Barry. And, for those of you who have not had the opportunity to get to know Barry or know who Barry is, he is a real estate lawyer, has been for over 40 years. What's it been, Barry? Like 42 or 44 or something?
47 this year, Patrick.
Oh, geez, I've lost track, which is it's a kind of a interesting, given how long I've known you. And of course, anyways, that all represents a lot of deals, thousands of real estate deals. And so you've gained a lot of expertise. You've got your creative buying strategies, your rapid cash program, your focus group programs of coaching and education that you provide a lot of investors. So we're going to talk a little bit about today some of the strategies that we're starting to see gain some traction in terms of interest again, because whenever these markets get a little hard, people want to get creative.
Well, that's totally true. So there's always room for creative strategies. Canada's a big country. A strategy that works in Alberta at a particular time might not work as well in Ontario, and something working in New Brunswick doesn't work as well in BC. But creative strategies are always available across the country. Yeah. And one of the reasons for that, Patrick, is because folks experience difficulty. They need help from our creative investors on solving problems on a win-win basis. And so whether the market's up or down, there are always opportunities on the creative strategy side of things. Now, when a market is down in one area, the agreement for sale strategy works pretty well. Agreements for sale is a seller financing strategy. Yeah. And it works when sellers need something other than pounding a sign in their lawn and having 10 overlist offers. If that's the way it is in your area and you want to come along to a seller financing deal, sellers aren't really very interested in talking to you because they don't need to. Yeah. But the minute the market takes a twitch and somebody paid maybe a little too much money for their property and the market popped down 10 or 15%, I'm thinking Ontario at the moment, then all of a sudden, some folks are over leveraged and they need a creative strategy to help them exit what's now an untenable situation for them. So
this goes back to what we have said many times in a real estate cycle. So part of Canada is in a bit of a real estate cycle slump, while we can say all of Canada is in different versions or different phases of the slump. Ontario's being particularly pressured. They came off a pretty big high. But your point is really well made in that there is no bad time to invest in real estate. There's just better strategies to use in different economies, given what's going on. And you make a really good point around what's happening with Ontario. People who bought into the FOMO may have got into some trouble. And now they got to get out of deals. We become the investors that come up with creative solutions. So let's just unpack. We're going to talk about agreements for sale. We want to touch on rent-to-own and wholesaling in this particular conversation. I want to cover a lot of ground and give people some real understanding of that, kind of at least that basic fundamental, so that they can kind of choose if that's of interest to them. So when we talk about an agreement for sale, Barry, you kind of said it's like seller financing, but that's not like a vendor take back mortgage, or it's not a mortgage assumption. Give us a little bit of depth on agreements for sale.
Okay. So an agreement for sale is a seller financing strategy. It is a situation. Well, let's use you and I, Patrick, as the examples. Mm-hmm. You are the owner of a property and you put a pretty hefty 95% mortgage on it, and let's say your property's worth $600,000, or it was 600 when you bought. You put a 95% mortgage on it.
Yep.
That means 5% down. Now the market has dropped somewhere between 5 and 10%. So let's say it's dropped 5%. So that's $30,000. Now the property you paid 600 grand for is only worth $570,000.
Right.
And your boss says, "So Patrick, your transfers come through. You're moving to Iqaluit, for example, from Toronto. Doesn't matter. You're going somewhere, and so you got to sell your house." And you go off and talk to your realtor. Say, "I only bought this 6 months ago, and I need to sell it." And he goes, "Okay, the market's twitched, and remember, I helped you buy, so I know how this went for you." And then you get into a conversation with the realtor, and he explains to you that his real estate commission on a sale of around $600,000 is around 16 or 17 or 20 grand. And he explains to you that you've got a pretty good size payout penalty on your loan if you're going to sell your house and move. And then he goes, "Yeah, you paid 600. It's only worth 570. Your mortgage is about 570. So there's no equity in your property. If you want to sell it, you're going to have to stroke a check for about 30 grand to pay my commission and to pay the payout penalties." So that's a seller who's in trouble. So the agreement for sale strategy says that I, as buyer, will come along and offer to buy your property. So, Patrick, how would you feel if I took over your mortgage, taxes, insurance, and all the maintenance on the property? Now, I can't give you any money because your mortgage is the same as the value of the property. So I can't pay you anything, but I will take over all those things, and you won't have to write a check for $30,000 to a realtor and to pay your payout penalties. How do you feel about that, Patrick?
Well, if I was that guy, I'd be pretty happy. I am that guy. I am that guy in this example. I'd be very happy to get from underneath that pressure.
Yeah. So what a totally stressed seller, he's got a job transfer going on. His house is underwater. He can see that maybe he's not going to be able to make payments. Maybe he's going to get foreclosed on. His credit rating will be in the dumpster for the next 7 years. And all of a sudden you come along and you've solved this problem. So other advantages. Guess what, Patrick? I didn't have to go to my bank and get a mortgage to do this. Good thing, because I have no more mortgage room. I've borrowed as much as I can borrow from my banks. They won't give me any more residential mortgages. So even if I had, was making enough money to qualify, they don't want to give me any more mortgages. So this is seller financing, and you don't have to go get a mortgage. So that's a huge advantage. Now, this is a no money down deal, Patrick. Are all no money down deals good deals?
No,
they're not.
No,
they're not.
And the other side of that is that, and just if, for those listening and have kind of followed us this far, is that, if you've never done an agreement for sale, you may be saying, well, who would ever do that? Why would anybody walk away from this and then have you look after their mortgage? Well, first off, there's a legal agreement that's put in place that says you're going to be responsible for all of it, number one. Number two, if you've never been in that position, you don't know what a motivated vendor may want to do or may feel they have to do, or just, they got to get from under the weight of that. And the circumstances say that I need somebody to solve my problem. And that's the key here, Barry. We're not talking about taking advantage of anybody. We're actually saying, come in, solve that problem for that individual. And it could be a great win-win situation, as you started with, that for both the vendor who needs to get from underneath that deal, and for the buyer, the investor who wants to take it on because they see a future.
Well, that comment, Patrick, why would anybody do this deal? That comes up all the time. Mm-hmm. And the answer is, as you said, sellers do deals for their own reasons. And one of the reasons in this example that we were using is you have tried every other thing you can possibly think of to try and get yourself out of your home that's dropped in value and it's it's a millstone around your neck. You've tried everything else, and no one else is helping you. No one else is helping you until I come along, or a different creative investor comes along, and all of a sudden it's the solution to your problem. So it's pretty obvious why a seller would consider an agreement for sale in this example. But overall, and this is a critical thing in creative investing, whether it's agreements for sale or rent to own or wholesaling, any of the creative strategies, we are continually surprised by what sellers will do because they think it's what they should do. Continually surprised in a good way.
Yeah. Well, I think you made in this particular scenario, if I'm having to scratch a check for 30 grand and I don't have 30 grand, or it's my last 30 grand, the last thing I want to do is get rid of that money. If I'm having to move, I may need that capital for something else to set up a new home. And so these are all scenarios that we can't understand the kind of the emotional drivers behind somebody's decision. And it may even be just real common sense given their circumstances. And we are there and we can take over that, look after that, take that pressure off them. They can get on with their life doing what they need to do next. And there's lots of nuances to these deals, Barry. That's why you teach a course on it, that, this is an all-day course to understand the nuances of agreements for sale. But it is very worth the time and energy and value of the programs, given what you can make on the back end of these deals when you find the right ones.
Yeah, no, totally is. There's, there are lots of nuances, which, as you say, I mean, we have an AFS course coming up. It's a full day event. There's lots to talk about. There's lots of scenarios to go over. There's lots of documents to look at and learn how to write and how to negotiate and how to market to find these deals. There's lots and lots and lots that goes on.
Well, we've got a couple of opportunities for those who are interested in kind of advanced strategies. You're hosting in Toronto. Is it April 1st?
Yes, April 1st in Toronto. We're back in Toronto for the first time in 3 years or 3.5 years.
Fantastic.
Full day AFS. And then we are in Calgary at the Clique Hotel, who treat us so well.
They're great.
On March 18th for an all-day wholesaling event. So those are two what we call focus workshops coming up actually pretty quick.
And then you're going to be speaking at the R4 conference on the coming weekends ahead, and you'll be going even deeper into this subject. And then we'll be doing another event in Edmonton. So we got some live events face to face. It's going to be awesome. So that's really great. And are you in Toronto? Are you also doing a rent to own segment, or is it just strictly agreement for sale? Just out of curiosity, Barry.
This is just agreements for sale. We usually do a rent to own segment when we do the 2-day rapid cash program. But we don't have any RTO planned for April 1st in Toronto. More and more demand, though, Patrick. People are asking, when are we showing up to do, a particular event in a particular town? And that's something I want to say is that you were talking about Canada shrinking, how technology is shrinking Canada. Well, it's something else that's happening is the reach of creative strategies where it used to be kind of centralized. A couple of people in a province were doing something and it didn't really go anywhere. But between the things that, that a group like yours does and that I do, creative strategies are now much more favorably looked on, I would say, across the country. You don't get that, say in Ontario where agreements for sale haven't been that well known. I can say now to people, agreement for sale, and they don't look at me like they have no idea what I'm talking about or I'm crazy. So including lawyers in Toronto and in Ontario, which is really important that we have lawyers on both sides of a deal who understand the strategy. So that's also improving a lot.
That's awesome. Now, again, you're going to be at the R4. You'll be talking about these strategies, talking about the program Rapid Cash in May in Edmonton. Plus, you've got other events going on. Rain's got other events going on in terms of live events, folks. So you're going to be able to get in there and, like we say, shake hands, kiss babies, give out some good hugs, and get to know. And these are smaller environments. These aren't several hundred people. These are far more intimate environments so that you can really have great conversations and really take the learning to the next level because they are smaller groups, Barry. Is that a fair statement on your side?
Yes, smaller groups, but big enough that you can make a lot of contacts and
Yeah,
do a lot of networking, because you and I both know that networking is ultra important on the creative strategy side. It's more important for some than for others, but you've got to get out and show your own flag and meet people and
yeah.
make some contacts, and that grows with you as you grow your real estate business, and it's an essential part of any successful real estate business.
You know what I love about the programs that you do is you've got a great team of people that are actually doers. They're action takers. They've been doing dozens of deals amongst them, and they've become real experts in all of these strategies. And what I love about that is that when you realize that they can do it, when you start to see what's possible because they're actually doing it, then
Yeah.
of course you start to see opportunities that you maybe never saw before. So Barry, let's move on, because rent to
Okay.
own is becoming more and more popular. I know that, you know, it shifts from province to province, but at the end of the day, rent to own is an opportunity pretty much any time. But right now, given interest rates, given the cost of rent, given the immigration into the country and no credit rating for new immigrants, I mean, there's just seems to be so much opportunity for investors who can understand the strategy of RTO. Why don't you talk us a little bit about what is an RTO, or a lease to lease? What did I lose? I lost the phrase.
Rent to own,
Rent to own or
lease option,
lease option. Thank
lease
you.
option.
It's not complicated, but sometimes, you know, my brain fires on so many different
Sure,
strategies. So lease
sure.
options, rent to own. Give us a context for that strategy, and
Okay.
let's dig into that a little bit.
All right. So rent to own, more formally known as a lease option, but most people call it a rent to own,
Yeah.
is a strategy that works all the way across the country. It's not as subject to the vagaries of the marketplace as and the real estate cycle as some strategies are, and the reason for that is that rent to own involves someone who wants to be a homeowner. They want to own a home right now. And for various reasons, they can't. New Canadians, so they don't have a credit history, started a new job, incorporated and bought a business. In all of those circumstances, lenders want a couple of years worth of history from you before they will listen to you. You might be doing really well in your business, and you might have brought a ton of money with you when you moved to Canada, but lenders are just edgy about lending to new folks. Maybe you're divorced and now both of you need a new home because the old home is sold.
Yeah.
There's any number of reasons why people want to do rent to own. They haven't quite accumulated enough down payment money. Banks always want you to have your own sweat in the game. So you got to have a minimum of 5% down, probably closer to 10 if you're doing rent to own.
Yeah.
And you need a program to be on to save it. So so there's lots and lots and lots of reasons why people want to buy a house and can't, and rent to own helps them get into a home. So a rent to own consists of a lease, because at the moment the person who wants to buy from you can't buy, so they're your tenant. So they move in like any tenant. You get them signed up on the lease just like you would.
Yeah.
And the other second document is an option agreement. The option agreement gives them the right to buy the home for a certain price within a certain period of time. And the whole process is to help people accumulate the deposit and get over what the mortgage qualification issues are that are stopping them from buying a home. So often there's financial coaching to do. Often it's just showing people what they have to do, and then, giving them a hand to keep an eye on it so that they make steady progress. It's going to take 2 or 3 years to solve all of their why can't I get a mortgage now issues. Yeah. And so over 2 or 3 years, you help them through and make sure that they solve those issues, so that at the end of the day, they can get a mortgage and they can pay you the rest of the money they owe you. So that's kind of the background to it.
Yep.
On the investing side, you can do very well as an investor. You get paid certainly top market rent. You get paid typically a purchase price that's based on the appreciation of property. and it's usually a conservative. What's property going to do in an area? It's going up maybe 2.5 or 3 or 4%. So you're able to sell, property for $500,000 today. It increases by 3% over 1 year, another 3% on that accumulated value in year 2, and in the third year, whatever those numbers came to in years 1 and 2, it's another 3% up.
Mm-hmm.
So it can be quite lucrative, both for you as a person doing a rent to own on your own. It can also be quite lucrative if you don't have any money. I mean, your rent to own person needs a house, so you got to buy them a house. If you can't buy them the house, you can go to an investor and show them pretty easily how they can make a return of 12 to 15% is not unheard of at all on the money that they put up to help buy the home that the rent-to-own person is going to buy in 3 years. So
you just become the deal orchestrator in that case. You're bringing capital to the game through your investor. Your investor's hands off, and you're orchestrating the whole thing. You're in the middle, managing both sides of that equation, looking after it. And to your point, it becomes a great ROI for both of the investor and you in the middle, but also is a big win for somebody who wants to buy a house, because if they haven't, for whatever reason, and there's lots of reasons that people can't get into those, from messed up credit ratings for all sorts of reasons. I recall one of the RTOs that I did, this is a few years back, but the husband and wife had split. It was a really ugly divorce. His credit rating was absolutely trashed, but he was making, I want to say, $350,000 a year, but just literally couldn't get a mortgage. There was that much damage done, and it took him a while to, regain the capital as a down payment. But he was great. He had 2 kids, and it was wonderful. And he had kids on the weekend, and it worked out extremely well for everybody in that scenario. And we had to exit in a bit of a down market. So even if we had to come off the original price, he negotiated that, we still did exceptionally well. Yes. So, I share that. There's all sorts of really great tenant buyers out there.
Yeah, there really are. It's a strategy that works across the country. It works, a little bit better in appreciating markets, but it certainly can work in flatter markets. It's also a good strategy to. It's a good exit strategy. If you've acquired a house by agreement for sale, often exiting through a rent to own is a great way to increase your take on that kind of a deal.
That's fantastic. Now, final topic for at least for this session, Barry, because I always love having you on a show. But we were talking earlier about just how much the world has shrunk with technology, and what it opens the door for. That investors can do deals right across the country. And you talked about one of your, I don't know if he's a student, I think so. One of your students that you worked with, and learned, and he's learned, but he's doing deals literally on the East Coast, and he's based in Calgary, and he's doing wholesaling deals, which is just, to me, is like, there's a perfect example of just how much the world has shrunk.
Yes. Our student lives now. He lives in Alberta. He's married, got one baby, I think another one on the way. He works for one of those big oil companies up in Fort Mac. Yeah. But he's from New Brunswick. He's got family there. And when he was back home, he started looking around, and he saw some properties that were kind of run down, and got in touch with the owners. And because he's from New Brunswick, he had a bit of an edge there in the New Brunswick market, and he was able to, just talk to a seller and say, hi, I saw your house, and I don't mean to say anything, but it looks like the grass hasn't been cut for a while, and if you don't mind me asking, what's going on with your house, and would you be interested in selling it? Anyway, that approach has just garnered him a whole ton of deals, which he's quite comfortably sitting there in Calgary doing these deals, works with some of his family members in New Brunswick, and he's doing very well. And there are other stories of people doing rent-to-owns, not where they live, although it's fine to do them right where you live. Most people do that. So, yeah, technology has shrunk the country, and There are deals being done, I'll tell you, every day in every area of the country.
So let's just kind of give some context to wholesaling for those who don't necessarily understand it. And that would be, in this case, he's finding deals, he's approaching homeowners in this case. And that's probably not the only strategy he uses, but if it is, it doesn't matter. And he's being able to get good deals on properties. He may even be looking for ugly houses that he can then turn and resell or sell to a investor buyer who's looking at maybe doing a BRRRR or a fix and flip as an example, or just doing a buy and hold. But either way, he never has to take possession of that property and or get a mortgage for it. He's literally wholesaling that deal.
That's exactly it. He gets the property under contract using the well-known kind of realtor's contract for New Brunswick, which is keeps people at their ease, and people look at that. It's a familiar contract. It's not something weird. It's just basic contract. Gets it under contract, and then he goes to his buyer's list. For wholesaling, your intention, as you said, is to get the property under contract and then find somebody to buy your contract from you. You're not closing on the house. You're not buying the house yourself. You're getting it under contract, and then you are, the correct word is assigning, which is selling your contract to somebody else who does want to close on the house. And so what you're looking for is a property that you can get under contract under market value. And that, Patrick, goes back to what we talked about at the beginning, which is that you can't allow for why sellers do what they do. There's lots of reasons why sellers will sell for less than it's worth. They just want to get rid of it. Sometimes they just don't want anybody in their house. They don't want anybody, a realtor's traipsing through a whole series of buyers. People are hoarders and they're ashamed of the state that their place is in. So there's a whole bunch of reasons why sellers will sell under value. But if we take a New Brunswick example and we get the property under contract for, say, $350,000, but with a little bit of paint, it's worth $400,000. Now we've got a gap of 50 grand between $350 purchase price, $400 kind of fair value. And then you go to your buyer's list and you go, here's the property. And your buyer will go, okay, well, what would you like for this? And of course, you want to have as much of an assignment fee as possible. And so you might ask for $15,000. You give me 15, and now you're really into this property for $350 plus the assignment fee makes $365, but the value we all agree is $400. So there's a win-win for the seller who got rid of a property in a way that suited him. There's a win for our wholesaler who pockets $15,000 without having to close on the property and without doing a whole bunch of work. And the buyer is going, wow, that's great. I got $35,000 instant equity here. So that's kind of how the wholesaling thing fits together.
And there's a number of investors. I mean, at the end of the day, they do it full time. They do exceptionally well. Their buyers list. So, the wholesaler is got a buyers list of, investors who are always looking for deals. So he knows that he starts to learn who his buyers are, and then he's actually looking for deals that even go their direction. So it all becomes part of the strategy once you learn it and understand it. So very appreciate your time today. What I love about all of this, folks, is that when you look at these advanced strategies, it really works. If you're hitting the ceiling of getting mortgages, if you're hitting the ceiling of having capital that you need to invest or have open to investing in a long-term buy and hold kind of traditional strategy, these are kind of problem-solving strategies, but they also solve your problem of being able to invest without having to go to the bank, without having to dig into your bank account too deep, and really opens up the opportunity for you to go in and continue to grow portfolio, generate some income, and do that in a really powerful way. All you need to spend is some time getting the education. That's why Barry's going to be at the R4 conference. And as well, he's doing his program April 1st. And then again, I think you said in March in Calgary, Barry?
March 18th in Calgary, wholesaling.
Beautiful. And I'll add some links to all of this so that you can get into the description I'll follow
Okay.
up and add some links to
Sure.
all of this, and Donna can send me what she needs to send me, and we'll get that all handled. So Barry, appreciate your time as always, my friend.
Hey, Patrick, always fun. Ready to do this anytime.
Beautiful.
All right.